All right, so we all know volume can be super helpful information for day traders because it represents participation in the market. However, I never really understood how to use it before because we see so many scenarios where a bunch of volume comes in, the candle's red, I would go short, then the very next candle, bigger volume would come in from buyers and I would get stopped out of the trade. So obviously we can't see into the future, so it's hard to know, the volume we're getting now, it looks elevated, but then the next candle can have bigger volume and you get stopped out. And this is where volume can get really confusing and you end up taking a lot more red trades. And it wasn't until I figured this one thing out that I'm gonna be showing you in this video where it made way more sense to me. And now volume is one of my highest probability setups and I use it in a very particular way. So with that being said, let's go into the computer. I want to show you all of that in this video. So if you struggle with the volume, I think you'll get a ton of value from this lesson. So let me show you a recent example of exactly what I'm talking about. This happened on gold. This applies to NASDAQ, S&P 500. I trade futures. These are the main three things I trade. Now, if we pay attention to when the gold market opened, as you can see, volume was kind of low and we started getting some volume spikes, right? So these are these blue bars right here. Started getting some volume spikes here. We got another volume spike right here. And then what do we notice? The volume really started to increase. Okay, so we got some massive volume. This really stands out. This is typically what I like to see. However, I don't use it the same way where I used to use it. And like I said, I would just get stopped out on the next candle, right? Because you don't know how big the volume is going to be on the next candle. Okay, you only know what the volume is on the candle you're entering on and before that. So with that being said, check this out. So as you can see, we had a pretty big sell-off right here and the volume started really increasing, right? So we can see this is the highest volume of the day when this candle happened. And then what we see here is the very next candle, right? The volume is almost double. Okay, so you can see this volume really stands out. It's a red candle and it even closed near the bottom, right? So it's not like this was even a reversal candle or anything. And this is where it really started confusing me because it looks like this candle all came from sellers, right? The candle is red, it closed near the bottom. We had huge volume coming in. And then what happened next, right? We started running up like crazy. Okay, and this obviously would have stopped you out. So this begs the question, how do you actually use volume in the market? How do you use it as a confirmation, even if you're trading with a trend, even if you have levels, right? How do you actually use volume as a good confirmation? Well, you first have to understand how this works, okay? So when we're using candles and volume, exactly what we're doing here, we see this red candle close to the bottom with very big volume. And then price starts running up afterwards, right? It makes no sense. It looks like all kinds of sellers stepped in. Why did we not go down? So we got to keep something crucial in mind. When we're using candles and volume, right? You got to keep in mind that candles equals result and the volume is the effort. So volume represents effort by sellers or buyers. In other words, participation, right? How much effort are they putting in to push the price down or up? The candles is the result. So we had all kinds of effort being pushed in, all kinds of effort. And then we see a candle that, it sells off. It's a red candle, but based on the amount of effort that was put in, they should have got a way bigger result, right? The effort needs to match the result for you to accurately, decide what's going to happen. So going back to this example, as you can see, right, we had massive effort. Okay, this huge volume spike, this represents massive effort being put in. As you can see, this volume was the effort and this candle was the result of that volume. Now, what do we notice here, right? We notice something doesn't add up. We had this much effort, but the result was very minimal. Based on the volume, this result, we should have had a huge sell-off, right? We should have had a lot bigger of a sell-off because of how much effort was being put in, right? But if we see something like this where, again, we had massive amounts of effort put in, but they only got a little bit of a result. It's not like we sold off that much, right? We sold off a few points. So this is where something doesn't add up, right? So what does this tell us? All kinds of effort is being put in, but the result is minimal. Well, that tells us that there is also lots of buyers sitting down here, right? And keep in mind, with normal candlesticks, they close based on the time, right? So there could have been a bunch of buyers sitting in here and then it just happened to close towards the bottom at the very end. So this doesn't match up, okay? So basically what this tells me is there's actually a decent amount of buyers on this candle. Even though the candle is red, even though we closed at the bottom, always go back to effort versus reward. Does the effort match the reward? Does the reward match the effort, right? So you can use the same thing backwards. So here's some examples, right? This is what you actually want to see. We see rising volume and rising candles, okay? So we see rising effort and a rising result. Okay, we had a small volume, small candle, little bit bigger volume, a little bit bigger candle, a little bit bigger candle, a little bit bigger volume. Again, a little bit bigger effort, a little bit bigger result. This makes sense. This matches up. Now we go to the next example. This is where it doesn't match up. And this is where price could potentially reverse and, stop going up, right? Because it doesn't really match anymore. So check this out. Okay, we have a small candle with small effort. That makes sense, right? Small amount of effort, small result, that matches up. Then we have very big volume, right? Lots of effort, very small candle. Okay, something's not adding up. This tells me this candle, even though it closed to its top, even though the candle's blue or green, they're not getting the result they should. Okay, so it tells me some sellers are stepping in on this candle. Same thing here. We're getting a bigger result, low volume. Bigger result, lower volume. Something's not adding up. There's a huge chance that we're going to start pulling back here. And then obviously it's the same thing on sell side, right? We have growing effort, growing result. This matches up. Price should continue to go down. And then right here, we have growing result and lacking effort. This doesn't match up. We're probably going to start going up after this because this isn't matching up. So there's a mismatch in the market, which makes the market more choppy or makes the market actually reverse. So, but now you're probably thinking, Chad, okay, that makes sense, but how do you actually use volume in your trading? Okay, so actually this is a trade I took long. As you can see, I enter my position right here where in this candle close. And I rode up to this resistance. Obviously, I missed out on a massive move on this trade. This is on gold, but I had a clear reason for my entry long, right? This is my exact setup I follow. Okay, so when I saw this, basically we saw all this volume, right? Basically the way that I like to use volume, I like to use it as a place to put my stop loss. And mainly because I'm the type of trader where I do wait for confirmation. I like to wait for the MACD to cross. I like to wait for, and I actually use Heikin-Ashi candles. So I switch my candles up. I wait for a green Heikin-Ashi candle. I only trade with the trend. I only trade pullbacks. So everything was lined up. As you can see, if we zoom out here, we had an uptrend overnight and the previous day. We were in a bullish cycle. And then obviously we started getting pullbacks to this VWAP area, to this EMA. And this is where I started entering my position. Now, where I entered my position, as you can see, I entered on pretty low volume here. Okay, the volume wasn't standing out that much. So basically that means I can't put my stop loss below the candle I entered on. So again, this is the candle I entered on. It didn't have rising volume, didn't have big volume. The volume was pretty small. So it's not like I can put my stop right below the candle. What I always like to refer to is I want to see, okay, where was a lot of volume put in? Where are buyers defending? Okay, as you can see, buyers are obviously defending in this area. And it's kind of hard to tell with these Heikin-Ashi candles, so you can switch it up, right? But we can see clearly that buyers are defending this area because, again, there was massive effort put in with a low result, right? A little bit of a result, but compared to this volume, there should have been a lot bigger result. Tells me buyers are stepping in. So I simply put my stop loss below the volume, okay? Because I know there's a high chance that if we dip back down here, right, buyers are going to step in and push this thing back up, okay? Buyers are obviously defending this level. I want to put my stop loss below where people are defending. You kind of have to think of your stop loss as a goalie, right? So what I want to do is I want to put my goalie behind the defense, okay? If we're using the soccer analogy, I want to put my goalie behind the defense because chances are the defense is going to defend it. I don't want to use the goalie, right? I want the ball to be on the other side of the field making moves for me. But if we happen to pull back, kind of like we did right here, we got a nice little pullback and I had my stop below the candle I entered on, then as you can see, I would have got stopped out. If I do that, I'm not giving a chance for these buyers to defend me. And the only way for me to give myself a chance for the buyers to defend me, right, my defense, is to put it below where the volume was created. Now, if this candle had really high volume, we had a big result, big effort, right, then sure, I could put my stop below the candle, but as you can see, there is not much effort put in, so I had to put my stop below the lows, and I knew there was a high chance we'd chop around a little bit before we end up going along with the next stage of this trend, where I eventually sold at this resistance level. And you can see the same thing happen today, right? If we go to today on the chart, you can see this pretty much plays out every single day. We'll go today on gold. And what we can see here is I actually got in around right here when this MACD crossed. So I got in around this candle. I ended up selling at around 40. So I caught a nice 6 points on gold. This is a nice trade for me. Now keep in mind the candle I entered on, which is right here when I got my confirmations, I already knew the trend was up, right? Everything was lined up. What do we notice about this candle? There was no volume put in. So I knew I can't put my stop loss below the candle, even though it would have worked. Again, I can't put my stop loss below the candle because who knows, a big seller could try to step in and then it would stop me out real quick before going to my target, right? Getting that high day. So where did I put my stop loss on today? Well, again, I'm always going back to the volume, okay? So where's the volume? Where's the volume? We see a little bit of volume here. This is a red candle. Doesn't really tell me too much. Volume was minimal. Next big volume was right here. As you can see, most of this volume came from sellers and buyers. It was kind of a doji candle, so I didn't really count this as where I'd put my stop loss, obviously. The next candle over, we had high volume here. We had a big rising candle, okay? So we had decent amount of effort and a good result, okay? So this made sense. This checked out. So I simply put my stop loss right below this candle and the trade ended up working out. Now, let's say you missed this opportunity, right? Well, we can see we're at a big resistance area. We flew past it. What do we see? We have big volume here, so big effort, and we also had big result, right? I mean, this candle flew up 6 points on gold. That's a pretty big move for a 2-minute candle on gold. So in this case, this would be a good area to put your stop loss, right? And what do we notice? Price came straight down to this candle, literally to a T. And you know, if you had your confirmations and other things were lining up, you could have got a very low risk entry, held your stop right below the defense, right below the volume, and you could have got a super low risk entry and rode it to our next resistance. So anyways, guys, this is how I'm using volume. If you want more detail on this, there's a whole book on it called Volume Price Analysis by Anna Calling. I go check out that book. It explains all this in detail, but pretty much what I just showed today, that pretty much sums up most of the book. Then also that tip of putting your stop loss below the volume. If you're more of a confirmation trader, you wait for confirmation, right? Always put the stop below the volume, and I guarantee you're going to see a higher win rate. With that being said, guys, real quick before you go, I want to invite you to join our free Discord community. Inside of here, we have all kinds of other traders you can talk and network with. Also, inside of here, I give my exact levels and trading plan for gold, NASDAQ, and the S&P 500. So I share my exact levels I'm watching every single day in here. I also do my trade recaps every day inside of here as well, along with all kinds of other resources. So again, if you want to join our Discord group, like I said, it's completely free and open to the public. We don't charge you any money. All you have to do is go to the first link in the description below, or just head over to this link right here. We'd love to have you inside. That being said, I hope you have a great rest of your day. And as always, I will see you in my next video with another day trading lesson.